Hello and welcome. You're tuned into Buy Now, Sell Now on ET Now. I'm Srishti Sharma and with me is Kavita. And viewers, this is the show where we get you answers for all your stock-related queries over the next 1 hour. We're going to be taking your stock-related queries and asking our experts to guide you better. In a short while from now, our experts will be with us. But before that, Kavita, seems like the markets are once again taking a bit of a U-turn because the start was good.
Absolutely.
But in the past few minutes, Nifty Bank in red.
Absolutely, it is definitely off day's high. So we did show optimism initially, with the autos, banks, metal, pharma, and reality leading the pack. Consumer-focused areas display mild weakness, but then now we are seeing a U-turn, on the Nifty. As you can already see, the Sensex is almost at 84,632, which we can see it is fall by almost 0.5%. And if you look at the market breadth is also slowly going on the declines favor, where we have 1,025 declines, 1731 advances. But then look at the top Nifty losers of the hour. We can see Eternal losing almost 1.5%, GSW Steel almost 1% down, Interglobe Aviation, TCS, Bajaj Finance again down 0.25%. But then on the gainer side, yes, we do have a few auto numbers, which is Eicher M&M lead in the pack by gains of more than 1% right now. Max Health, NTPC, and Kotak Bank also leading almost close to 1% gains. So yes, the market is off day's high after showing a steady start, and Srishti, once again, the broader indices, which we were really anticipating that today we could see a U-turn over there, even that's not showing up. Initially, we did see a support coming in from mid-cap and small-cap, but then that's slowly fading out from the market as well.
Indeed, that's something that we will be tracking, that in the second half, what sort of moves we get to see on the benchmark indices. But amidst this market, a lot of stocks-related queries I'm sure our viewers will be having. So just to know that you can connect with us live on the WhatsApp number that will be flashing on the top of your screen throughout the show. Tell us the name, the region from where you are writing to us. Tell us the stock name that you have invested or you wish to invest going ahead, the quantity that you have or you wish to purchase, and the time horizon as well. And we'll try to get as many queries answered by our experts. But before we start doing that, let me welcome our expert on the show today. We are being joined by Hemen Kapadia on the show, Technical Associate at DR Choksi FinServ, joining us as well. Hi, Deven. Hi, Hemen. So good having you. Very good morning and thank you so much for your time. But Hemen, before we start taking the queries, why don't you give us a quick look on the markets, because markets are turning out to be really choppy. Where do you see them headed?
A very good morning to you, Srishti. Thank you for having me on the show. It's always a pleasure. So, we flattered to deceive. We posted a new high. That didn't sustain, Srishti. So this 26,277, the high posted on 27th September last year, as of now remains unconquered, so to speak. The daily picture has gone a bit negative. Surprising thing about the whole thing is, Srishti, this has happened on a relatively low VIX. We're still below 11. So either the lack of interest, December, or maybe people looking forward to Christmas, but if markets remain bland, there is no momentum. And it's just 5-7 stocks which are propping up the market. So frankly speaking, we've gone nowhere. And 2569 is a level I would look out for. If that holds, I think it's okay. But as of now, we formed a small rounding top on the daily chart. So I believe things are not looking very positive. Bank Nifty outperformance continues, but that is also under pressure. So frankly speaking, nothing to look forward to. Mid-cap, small caps have taken a beating, and they still don't seem to be in the mood to recover. So the rupee-dollar equation, I think, is an overhang on the market. I think till that stabilizes, this market meanders aimlessly. Srishti.
Any take on the broader market? We were really waiting for mid-cap and small caps to participate, but that doesn't seem to be happening sooner. Once again, a lull movement out there also. Hemen, what would you expect?
Hi, Kavita. See, if you look at the Nifty mid-cap index, mid-cap 100 index, which is, I believe, more widely followed, it's looking extremely, it's at crossroads. The high was posted at 60,925 last September, Kavita, and now we posted a high of 61,311. So we made a new high, but we are still over here. We haven't decisively closed above this. Extreme near term, yes, there is distinct heaviness. Long term, we've been here for 2 months. So either at the end of December, we break out from here and see a move in mid caps in Jan onwards, or it falls under a zone weight. So we are at crossroads. 58,500 breaks as far as Nifty 100 mid cap is concerned, Kavita. I think sentiment could take a beating and we could see a slightly more prolonged consolidation.
Right, the sentiments out here, even in the broader markets, could take a beating. All right, Eamon, that was about the market setup, and request you to stay on because right now let's just move towards a conversation with the management, and we are joined by Vidya Wires management, and the stock listed on the street at 50 rupees per share. But let's figure out how the financials panned out for the rest of the quarter. And what's the company planning? We are joined by Shailesh Rathi, Managing Director, Mr. Shyam Sundar Rathi, Chairman and Whole-Time Director, Vidya Wires. Hi, morning and welcome both of you. And let's just talk about how do you plan to ram up all your executions. So, specifically talking about the new Narsanda unit, when is it estimated to reach optimal utilization? If you could just give us a timeline, and how will the expanded capacity change your product mix? If Mr. Shailesh, if I could come to you with this question first.
So basically, we have currently 19,000 metric ton capacity in our current unit, and now we are coming up with a new facility with 18,000 metric tons at Narsanda. This is between Vadodara and Ahmedabad, and this facility will be operational approximately, like we will start very soon, and this will be operational by March, April, and fully operational. And besides this, we definitely see that almost next financial year, 60 to 65% utilization will come. Even in this quarter, we will get some impetus from this current unit also. So the revenue will accordingly, our capacity utilization, optimized utilization of our capacity, the revenue will also grow.
To know that. Hi, gentlemen. Morning. This is Shrishti also joining in. Firstly, congratulations on the listing on the bourses. A decent listing for you all, but give us some sense on the order book outlook. And Mr. Rathi, if you can help us understand that what's the visibility to improve your order book going ahead, the demand visibility, and do you have the end user industries for the next 18 to 24 months? How do you see that evolving?
So basically, we are supplying our products to various industries like electricals, we are supplying to power and distribution, we supply to renewables like solar, windmill, then we are supplying to all kind of motors, switch gears, etc. Then we also supply to railways, we do supply to engineering industries, and of course mobility, that is EVs. So we see that these all are rising segment, and majority of our customers remain same. We have a multiple product categories in our supply system. So many customers remain same, and we can offer multiple products to them. And besides this, the order book is very strong, and we see a very good orders in the coming 18 to 24 months. We can see that the renewables as well as the EV segment is growing very fast. And this kind of growth will definitely have good demand from our side as well.
Right, Mr. Shyam Sundar, let's come to you and let's talk about your market share. What market share do you realistically target within 2 to 3 years post-expansion? And what assumptions underpin the move from 5.7 to 11% over here?
At present, we have a market share of some 6% approximately, which will be raised to 11% in the coming time after our expansion program is completed. As already stated, our expansion program starts from next quarter and will be operational by 60-65% during the year 26-27.
All right, good to know that. But Mr. Shyam Sundar Rathi, if you can talk to us about the margin and the operational performance improvement going ahead, because you are definitely holding a decent market share, but your margins overall are around 4 to 5%. You have capex that is lined up, new expansion that is lined up, but medium term, How do you see your operational performance improving? Any targets that you have set for the margin improvement?
We already have 12 products in our portfolio. Another 6 products we are adding in the new facilities. These new facility products targeted are the sunrise industries, including this renewables, EV, AI. So all these industries are actually speaking, basically rising industry. They will give good margins, and we shall be able to improve it in our coming time.
Shailesh, I'll come to you because promoters are selling shares acquired at a nominal cost. Now, how should investors interpret this partial offer for sale? What is the promoter shareholding, and is there a commitment to maintain this in the medium term, Shailesh?
No, so basically, we have majorly raised the equity, and which is coming to the company. So like 275 CR, of that 140 CR is going for the expansion, 100 CR is coming for our working capital loan, repayment of the working capital loan. So company is completely debt free. It was already debt free, and even the new expansion is going to be completely debt free. And about the OFS, it's a very small portion. We wanted the people, the market to participate in our listing, and this is like what a whole story.
All right, but how do you differentiate from the larger diversified competitors? What's your what sort of a growth outlook that you have for the different segments, and also any expected contribution from the new products in the next 2 to 3 years?
So basically, we are already making 12 product categories currently, and we are adding 6 more product categories, and all mostly are going for the sunrise industry, and we have a very good product mix, and this makes us to a one-stop solution for our customers. And this sunrise industries is definitely will fetch us better margins, and this also like the demand is there, and the capacities are also like not aligned with the current demand. So we definitely see a better outlook on that side.
All right.
And
so
these 6 product categories, what we are adding will be contributing. Yeah. So we are like into copper, and we also have added aluminium as our another product category. So this all we looked at the EBITDA, and the margins would improve from here, what we actually traditionally are having.
All right, so all across positive outlook. Thank you so much, gentlemen, for joining us and talking about the company's financials going ahead. Thank you. And with that, it's time for a short break on Buy Now, Sell Now as well. And we will be tuning into our viewer queries session after this break. But just in case you haven't yet sent across your questions, do that on the number that's flashing on top of your screen. It's a WhatsApp number. Send us your queries and post that. Let's get all of your questions answered by Himi.
Let's put the spotlight now on one of the recently listed companies on the bourses, and that is Aequs. The company did get a stellar response on the listing, and as of now it's up almost 16%, and definitely in terms of the subscription the response was quite very handsome. But what's the outlook going ahead? Because yes, the company has its moats. It's present in an industry which is definitely has high entry barriers. They have a great clientele, but what's the outlook going ahead in terms of including more clients in their order book, expand that and improve operational efficiency? Let's now find out all of that with Mr. Arvind Meligiri, who's the Executive Chairman and Chief Executive Officer, joining us. Hi, very good morning, and firstly, congratulations on a good listing. Yes, the markets very well know about your company now, and they have participated well in your overall IPO. But let's talk about your US aerospace facility. What we see is that it was operating at around 14 to 15 utilization. If you can start by help us understand what's going on there. What's the clear strategy and the timeline to scale the US operations?
Actually, if you really look at it, the utilization in Western facilities, we measure it by by people. Actually, that 14% utilization is actually the machine utilization. Although we have more assets, the number of people is what matters in the Western world. So because of the severe requirement, we have to put a unified the hours as machines as the basis for utilization. We really don't measure the utilization internally, the utilization of the machines itself. We measure the utilization of the people. In US and France, our utilization is high. It is at people utilization ultimately. That's what matters to us. Going forward, we will provide that specific details to the market and the investors to see that. And if you really look at it, US and Europe combined is less than 20% of our global revenue of aerospace. So our focus is predominantly to make sure that full utilization happens, our capacity and assets are sweat 24/7 in India, and which we tend to do that, and we do that. So we see, if you really look at India utilization, it's 65 to 70% level in that range. And that continues to be there. And in fact, we're adding more capital. Part of the fundraise has been to add more capital into the India facilities. And US facilities, if we don't really have to get more of the if we get more work in there, ideally our customers all want to do work more in India than doing in the US and Europe. Only if the military work or export control work we do in those countries. That's what happens most of the time. So I would not be losing my sleep over having less utilization of the machines in US and France, because that's more measured by I'm using my resources, people fully there, because that's the cost really what matters to us.
All right. Hi, Mr. Menagiri. This is Kavita also joining in. So let's continue talking about capital utilization and consumer and aerospace segment, which you are saying is low. But then, we also want to understand by when do you expect utilization to meaningfully improve, and what utilization level is needed for PAT break-even?
Yeah. If you really look at our consumer utilization is at 20 to 20% level, and we just brought in a new capital in about 600 crore over the last 24 months, and just coming online now. We invested over the last 24 months. That's coming online in this quarter. So that also going to, because of that, our utilization is low. We are going to see quarterly improvement of this utilization. At about 50% utilization, we will be able to get a, EBITDA break even. And anything somewhere around 65 to 70% level will get to PAT break-even in this business.
All right, good to know that. Along with that, talk to us about your debt payment, repayment as well, because we understand that the IPO proceeds will be utilized for that, with 433 crores of debt repayment that is planned. But how much will the interest cost fall annually because of that, and how quickly will it get reflected in your margins?
Yeah, I mean, it's going to be pretty quickly reflected back into our margins. Coming next quarter, we should start seeing that. We are going to pay down, our net debt is going to become close to about 100 crore now, from a 533 crore level after pay down that 400 odd crore debt. And that should impact 30 crore plus, the interest cost, bring it down. And that should bring us to in a decent shape with respect to PAT perspective on a global basis. Just with the aerospace delivering what it's delivering and continue to grow.
Given the losses in FY25, what is your internal target year for returning to net profitability?
Yeah, I think net profitability is actually aerospace is already net profits, and consumer is the one, as I mentioned earlier, as the utilization improvement happens, we told about, that's when the profitability will come. It's going to happen in the coming quarters, and that's what the whole utilization is going to improve as we move forward.
But what's your current aerospace order book? I'm not sure whether you disclose this number or not, but going ahead in terms of the visibility, if you can give us some sense in terms of increasing your order book number, your clients, and the revenue visibility going ahead.
if you really look at it, our order book really is reflective of what my end customer order book is, Airbus or Boeing. Their order book is 10 years. Our contracts are 5 to 7 years, which pretty much matches to those programs. And so we have a very good visibility of our order book, and our growth is also corresponding to the natural growth of these programs which are happening, which are announced already. Just to give an example, Airbus A350, 320 is going from 52 aircraft per month to 75 aircraft per month by 2029, and we are pretty much will have that increase coming to us, that growth rate. And on top of that, we are also winning new contracts on a regular basis, and we'll start disclosing these wins every quarter basis, and that's very important for market to understand, and that wins translate into our revenues in about a 12 months period, because it takes that much of time to wins to revenue recognition of these things, and because these contracts will be 5 to 7 year long from that perspective. So we feel very good about where our aerospace stands, and our visibility on these programs are, and we feel very strong about this.
Now, since most IPO proceeds go towards debt reduction, what are the next growth triggers, new programs, new platform acquisitions, or capacity ramp-ups over here?
We already have assigned about 65 to 70 crore of the proceedings towards the capital expansion in the aerospace, and the consumer we invested about 600 crore of capital over the last 24 months. First goal is to make sure that capital get utilized fully, and then only we'll look at further capital allocation to that vertical in the coming year.
About your margins then, because what we see is that your aerospace EBITDA margin is at 19.4%. You can correct me if I'm wrong, but what steps will help lift the consolidated margins towards going ahead?
Yeah, it's predominantly our utilization of the consumer, which is improving literally quarterly basis. Our revenue growth in the consumer is also going to be, it happened at a much higher level, and it's going to continue to happen much higher level coming years, because we are starting with a very low base of, only about $10 million last year, and it's going to increase from there.
All right, with that, we'll let you go. Thank you so much, Mr. Meliguri, for taking time out and talking to us today. Thank you so much. Okay, but let's get back to Buy Now Sell Now, and let's start answering our viewer queries once again. We are joined by Hemant Kapadia and Lancelot Dicona. Hi, welcome back, and both of you on the show. Let's begin with our viewer queries, and let's take a WhatsApp question. This is from Bhushan, Pune, and is it a good time to buy Crompton and Neogen Chemicals at current level for long term? Lancelot, if I could come to you with this question.
Yeah, so I think it is for Crompton, they're talking about probably the Crompton consumer. And I think if you're talking of Crompton consumer, it would be a good time. As far as Crompton Greaves is concerned, it's more on the industrial side. Maybe if you look at the valuations or the fundamentals, it looks a little bit expensive over the, compared to its earnings growth, because earnings were a little weak in the last quarter. So one should probably wait for a little bit more correction if you look at Crompton Greaves.
All right, so that's about Crompton Greaves. But the next query that I have, Hemant, is coming in on TVS Motors, wherein Nara Simhulu, Nellore, writing to us from Andhra Pradesh, is holding 110 shares of TVS Motors, but his buy price is 3,495 rupees. He has a 2 years time horizon. What should he do? Help us with your advice.
Srishti, the way I see it, it's a clear hold. It's been in an uptrend for the last 5 years, and absolutely doesn't seem to be in a mood to change that. As of now, short term, medium term, long term, all time frames, it's upbeat. I mean, it's in a bull market. Close about 3,700 to the further upside. Hold for this time frame.
It's a hold as far as TVS Motors is concerned. But then let's take Mr. Dandapani's question. He's from Chennai, and Lancelot, he's holding PFC at 380. He's not given us the time frame, but then I'm assuming it's slightly longer, 1,300 shares. That's a quantity. PFC at 380.
So I would think, PFC at 380, if you're holding it, you should continue to hold. because given that RBI has just dropped rates and has eased liquidity into the system, NBFCs like PFC will see their borrowing costs come down and net interest margins improve. And as transmission takes place, power is a segment that has an ongoing, an ongoing demand for credit. And PFC being one of the major financiers in the space should see, significant growth in the loan book as well. So good growth in loan book coupled with lower interest rates as far as borrowing costs are concerned would mean better margins for PFC, and one can look at holding on to it for a long term as well.
That's about PFC. The next query, Lancelot, let me come to you only because this one is on Keynes Tech. The stock has turned very volatile of late. We all are aware about the reasons, the management clarification, and on a daily basis, we are getting to have the queries on this one. Today, Talishar from Odisha is writing to us holding 25 shares of Keynes Tech at a price of 5,490 rupees. He's been holding the stock for the past 3 months. What do you suggest for this particular counter? He's ready to hold on for the next 8 months as well.
I think, this company had seen a huge rise in price and probably the price went up much ahead of its fundamentals. Fundamentally, the company will take, maybe another 1 or 2 years to grow its book to come into a range where it becomes reasonably attractive from an investment perspective, because it's trading at such a high multiple that even from this level, if it corrects another 25%, then also it will still be an expensive stock. So if one is holding it and booking a loss, it's better to exit something where you may not see, immediate improvement in the fundamentals. Better to exit there, and maybe you can look at the technical side and then see whether the technical, bounce happens, and then you could exit at that point in time.
All right, so that's the take exit on Keynes Technology. With that, it's time for a short break, but then we have our experts live connected and viewer queries are also trickling in. In case you haven't yet sent across your questions, do that on the number that's flashing on the screen.
Welcome back to Buy Now Sell Now show, where we get you answers for all your stock-related queries. We have Himen as well as Lancelot with us, and let's get back to your queries then. And the next query that I have is coming in on Bajaj Finance. Himen, if you can help Akbar Ali from Navi Mumbai. He's holding. He actually wants a view rather on Bajaj Finance and says that is it a good time to buy 500 shares of Bajaj Finance at current levels?
Well, it's an all-time classic blue chip, Shashti. We've been an uptrend for the way I see it, 17 years if I'm counting. So yes, it quantifies as a buy, but keeping in mind the recent move, I would suggest just spread your purchases, maybe like an SIP. It remains, like I said, an uptrend on all time frame, but yeah, you can just spread your purchases. But yeah, the setup even now is inherently bullish.
All right, the setup is bullish, and so that's your recommendation coming in. But then let's move on, and very interesting question. And Lancelot, I'll come to you. This is a question from Mr. Selva Raju, and he wants to know the right time to purchase Interglobe Aviation. I'm not sure about the time frame, but then yes, let's take a take from both of you. And Lancelot, let's begin with you.
So, if you look at Interglobe Aviation, it is a monopoly, near monopoly, because it has almost 65% of the aviation market in India. But having said that, airlines have a lot of restrictions as far as governments are concerned. One is on operating, second is on the, the number of flights that they can operate. Recently, we've got news that the Interglobe has put a restriction on the number of flights that they can operate till March, till they get this issue resolved. So I think that you are going to see with the drop in volumes, the profitability of the company is going to be under pressure. And even at this level, it is still trading at an expensive valuation. So one should really wait for it to correct significantly. And if the management takes proper steps to remedy the situation on a long-term basis, yes, then one can look at it from a financial or a fundamental perspective.
Sure. Hemain, any technical suggestions?
Uh, Actually, Kavita, things are not looking too pretty. We are on 10th of December. I'm looking at the monthly charts. If this situation was there at the end of the month, then it quantifies as a very clear exit. We've seen a sideways distribution breakdown for obvious reasons. There's a bearish gap on the weekly chart, which is not good. It's about below the 55-week exponential moving average. Okay, on the bright side, rock solid support at 48, which could provide near-term respite, but I believe the long-term technical picture has taken a hit. I'd say avoid for the time being.
Right, so that's an avoid when it comes to the technical check for Interglobe Aviation. But Lancelot, the next query that I have is coming in on Dixon Tech. Rima from Chennai holding 95 shares of Dixon Tech at a price of 17,590 rupees. Yes, of course, the valuations have been a concern and the stock has also fallen. But is this a good time to average out this particular counter? What will be your advice? And she can actually hold it for more than a year.
So I think if she is holding the share, having purchased it earlier, you may continue to hold it because the long-term outlook is good as far as Dixon Tech is concerned, because they have been getting consistent order growth, and you are seeing new facilities that they put up should actually enable them to leverage on the higher capacity that they have. But if you look at the near term in terms of valuation, this stock is still trading at a very high multiple, and so fresh investment is a bit risky. It's the risk reward is not in your favor. If maybe it corrects another 15-20% from here, then it could be an attractive proposition. If you're holding, you can continue to hold, but if you want to add fresh money, you need to wait for a correction and then only pick up the stock.
All right, so that's a take on Dixon Technology. And with that, it's time up on the show as well. Thank you so much, both of you, for taking time out and helping our viewers with their stock-specific queries. And it's a goodbye from me and Srishti as well on this edition of Buy Now, Sell Now. But then for more market updates, stay tuned to ET Now.